Hey guys, welcome to Savage Trading Systems. What I'm going to do today is actually show you how we trade with the market makers, with the banks, and with the liquidity providers. I'm going to show you a really simple sketch right here to give you a good idea as to how we actually trade with these guys and how we take advantage of really good market opportunities. Okay, and then after that, I'm going to take you to a chart just to give you a really good idea about how our strategy looks and our setup. So I'm going to expose the whole thing to you right now and give you an opportunity to make an educated decision and decide if you actually want to learn our strategy to its fullest extent, to actually have one-on-one coaching and have excellent training in the process. So what we're going to do is now when the banks, the market makers, and the liquidity providers are actually moving in the market and trading in the market, then what they do is they leave what's called breadcrumbs. They leave footprints in the market, and you can actually see it in the form of what we call market structure. All right, guys. So market structure is basically when the market is creating higher highs, all right, as shown here, right? Let me go here and adjust something here. All right, so the market is creating higher highs. Right, so the market create higher highs and then comes down and closes out and higher lows. Higher highs up here, okay, then higher lows right here. Okay, higher highs and higher lows. When this happens, what's going on in the market is that the market makers are going through periods of what's called accumulation when the market's going up, and distribution when they're distributing contracts. So they're accumulating contracts and distributing contracts. Going up, they're accumulating contracts and they're distributing contracts. And once again, they're accumulating contracts and distributing contracts. What the average retail trader and when everyone else assumes that, is just buying and selling, when the actual proper term is accumulation and distribution. So you want to be able to take advantage of proper distribution opportunities and proper accumulation opportunities. And you have to be able to identify market structure. And now when they're leaving market structure or they're leaving these breadcrumbs, we actually know how to take advantage of being able to follow them based on their breadcrumbs. And their breadcrumbs is just when the market is creating higher highs and higher lows. The market is creating higher highs and higher lows by nature. When a higher high is created, a higher low is created. And then when that structure is broken, so let's say the market is creating higher highs and higher lows up to this point where there's this strong push for liquidity, where they actually need to be able to push for liquidity in order to go into a full spectrum of what's called distribution. So in this case here, the market makers went, or the market makers, liquidity providers, and banks went into a full zone or a period of true accumulation. And now they're going to go into a period of true distribution when they're going to distribute contracts. So what happens is after this strong push for liquidity is achieved, then the market goes into what's called creating lower lows, lower highs, lower lows and lower highs, and once again, lower lows and lower highs. And they literally leave these breadcrumbs and allow people who actually know how to trade the structure that follows them to be able to take advantage of massive movements in the market. And you're able to take just crazy pips. So what I'm going to do is I'm going to go to a chart and I'm going to show you guys how this looks on a chart. So we're going to go to a new share and we're going to look at my chart here, and this is what we're going to take a look at. And I'm going to show you guys periods of accumulation and distribution and how we really identify. So for starters, guys, we love using the fibs. You have to understand the importance of the fibs. The Fibonacci ratio, which is a golden ratio, is at 61.8, the 161.8, and also the 261.8. Okay, these are naturally occurring mathematical equations that occur in nature, whereas you see it on flowers, flower petals, you see it on seashells, things like that, in so many things in nature. So, and also you see it occur also in the Forex market. You have to understand the Forex market is human driven by supply and demand, and contracts being accumulated and distributed. So the Fibonacci, what we found is that the golden ratio, the Fibonacci ratio, also occurs in the Forex market. So what we do is we follow natural laws. We aren't making up things. We aren't guessing or anything like that. We're basically following the natural laws that's just created from our natural activity in the market, and we take advantage of those things. That's why we love the fibs. That's why you see so many professional traders use the Fibonacci ratio or the fibs. All right. Okay, and we take advantage of what we call the golden flip and also the golden cross. But as one of my students, you're going to learn exactly how to take advantage of some of these most naturally occurring events that happen in the market, especially when there's periods of accumulation and distribution. Right, guys? So we don't make things up. We don't try to, guess or assume. We simply go where the money is going and where breadcrumbs are being left. All right, so we have our system, our MA system. We have other indicators here that I circle here. We have these indicators here, right, with the ball and the stars. We have these indicators, and you will see these things. And then they allow us to be able to identify periods of accumulation and distribution. So when the market started to create lower lows and lower highs, all right, and we know that the market is going into a period of overall distribution. So we want to take advantage of, for example, we have this higher high created here, and then this higher low, followed by a lower high right here, right? That lower high gives us an indication that the market is going into periods of distribution, that we should expect for a lower low to be created. And by far, what happened, a lower low was created right here, right? And then once again, we have a lower high. What comes after a lower high, guys? A lower low. Then followed by another lower high, and then another lower low, right? And we show you guys how to either take advantage of this lower high to be able to follow all the way down to this lower low. And this is the day chart we're looking at. Those are massive pips. And what we're saying is that market makers leave breadcrumbs, and then we can take it down to our 4-hour time frame and be able to follow the same setup, right? Lower highs and lower lows being created, as seen by what we call our stars here, right? And then we're able to actually get into the market and take advantage of strong movements like these, guys. These movements are insane. So then you're able to actually, once you actually see how our setup is, guys, is insane how simple our setup is. So now we go to our 1-hour time frame, and we're able to make massive entries on our 1-hour time frame that gives us great opportunities by taking advantage of our arrows that we have, which allow us to take advantage of higher lows to be able to ride the market up to higher highs as we trade structure. And then you guys will learn exactly what some of the most insane arrows. All of our arrows here, when you're trading the strategy, are based off these lower lows being created, whereas you can ride them up until you hit a lower high. A higher high, as well as again another arrow, ride it up again. So guys, just being able to take advantage of these entries like this, being able to see the big picture when we show you guys the actual big picture, and when we tile our windows. Being able to identify the market over the big picture allows you massive opportunities to be able to trade just one pair for a month straight and just take massive profits off one pair. So that's why we say, guys, you can sit at home, you can relax, and you don't have to, be scalping the markets and being, in and out of the markets, joining chat groups, people sending you signals, marking up charts for you. Our setup, once you set up your charts, you're literally done for a week, 2 weeks, a month, and you can literally just trade one pair and just confidently and safely and accurately be able to ride periods of accumulation and distribution, especially when you follow our strategy. Now, even more so, when you're able to do this, we have our Savage Prime robot, which you see right here on the 1-hour time frame. You're going to get this robot, and you're going to be able to tell this robot, okay, market structure has just changed, right? Let's say you see a reversal here in market structure. If you want to take advantage of the reversal there, or reversal here when you get your first arrow, or when you follow our strategy to the letter, to the T, and you only trade market structure when we get what we call our stars, and then an arrow directly after that. And then you can literally tell your robot, all right, Savage Prime, just trade long only. This is the period when you can trade long only. So I'm going to show you guys a really insane quick example of how this works. So let's say, what day is this right here? We're going to take 10, 15, 1700 until right now. So what I'm going to do is I'm going to go to my strategy test, and I'm going to show you 10:15. All right, so 10:15, okay, until today, okay, and then we're going to tell, and what are we looking at here? We're looking at, is it EJ? Yeah, we're looking at EJ. All right, we're going to tell, I'm going to make a few adjustments on my bot. I'm not going to show you guys everything insane on my bot, but what we're going to do is we're just going to let it trade in that direction. So based on the strategy and my training, I tell you guys, all right, You can have the bot trade in that direction when the strategy hits, when you get an error on your 1 hour time frame, as long as you follow the strategy properly. And then we're gonna check my settings, and we're gonna have it safe and conservative right now, just for the sake of this video. And then you're gonna watch as the bot does its thing, right? So we're trading long only, all right? And we have some really strict some really aggressive settings in this case here when it comes to stop losses and take profits. So you honestly are just watching the bot do its thing. So what you see was for that time frame that we set, we let the bot trade for us, and we go to the report. Your drawdown is extremely minimal in this case, and it was on a $1,000 account, but it's okay, right? It's extremely minimal, and this is just for the sake of showing you guys how we use the strategy, right? And you see 2 trades on a 0.02 lot on a $1,000 account. Look at the pips that we took, right? And then we had to close out on stop. It opened the trade, but we only did this up until this point, right? Up until the close of Friday, right? So if you would have just let the bot trade for you from the 15th to the 18th, you would have taken some good pips. So you see the amount of pips that we've taken. This is just massively insane when you use a bot without strategy. So this is how we're able to double our account the way that we do, guys, is insane. So we're gonna go back to the one. So you see the 1 hour time frame. We did that. So let's say, for example, you decided you see that we have a bounce off one of our indicators here, our supply and resistance indicator here. We got our first bounce and then our second bounce, right? Because the market created an actual higher high right here. So it created a higher low, and then we got an arrow after that. But let's say you decided to take that arrow off that higher low, bouncing again off that same time frame, so 10-6. So we just go to 10-6, right? And we decided to just trade to take advantage of that one. Is that correct? Is that the opening of, we want to be right around, I'm sorry, what was it? Yeah, okay. So this is the arrow right here, the first arrow off the higher low being created. So this is the first arrow. So we're looking at 10-9. Make sure we do that properly, 10-9. And we only want it to go long only. So let's see what we get here, right? And you're gonna see if you follow the strategy the way that we teach it, and use the robot as well, so you can manually trade this using our setup, because that's what we primarily teach, how to manually be able to trade this and take advantage of these movements in the market, right? And also how you can do it using the robot as well as your trade companion. And you see, let's say you don't have much time to trade, but you really want to just learn the strategy and so that you can implement the robot accordingly. Because you have to understand, your banks and your market makers and your liquidity providers, they aren't using, they aren't always manually trading. Sometimes they use software to trade. Now I had the experience of being able to actually see the back office or the office where a bank's, and I can't say the name of the bank, but it's a local bank here in the Midwest, a really big bank in the Midwest. Actually, one of the largest banks, to be honest. I've seen the guys who trade, or who actually manage the software for them. They don't trade for them, but they manage the software. And you can actually go on YouTube and you will see that a lot of companies actually have guys that manage the software. These guys are mathematicians, they're traders who do these things. So let's go to the report really quick. And we see the drawdown was only 1.29%, right? The return on investment was 44 bucks. But you see that we were really conservative on our lot sizes. So you understand that if you increase your lot sizes, then you can actually achieve greater profits, right? So when you use our strategy, manually trading and using the robot, you understand how we compound our accounts. So guys, if you're ready to get started, you want to learn how to manually trade the structure of the market with us. You want to be able to take advantage of massive opportunity with us, and see how we really crush the markets using the 1 week time frame, the day time frame, the 4 hour, the 1 hour, and the 5 minute. Any one of those gives us massive opportunity to trade even on one currency pair. We can eat on one currency pair for the rest of your life if you wish, and use our robot as well. You get all the updates to all our robots. You get access to our coaching group. You get access to our other robots that we have in the group. They're way more aggressive if you want to really aggressively go in and grow an account, but you can definitely use this robot here. It's insane when it comes to just being accurate and being safe. And we also introduce you to what's called a hedge fund robot. that's trading on a $2.9 million live account right now that we show you guys. So if you're ready to get started, take advantage of the discounted price right now. You don't want to wait too much longer before the price goes up, because people are eating this up right now, and we want to make sure that all of our coaches, because you guys have access to 2 additional coaches inside of our group, we want to make sure that we're able to really focus on everyone and help everyone make some good money in Forex, grow your portfolios, build accounts for your children and yourselves. All right, guys, so make sure you click below, click to get started. Just pay for the training. If you want to upgrade later on to actually one-on-one coaching, you have the opportunity to do that as well. So once again, guys, I appreciate you stopping by. I just wanted to make sure you had the proper training, just so you can know and see our strategy and how it works. So feel free, guys. Let's get started. I'll see you on the inside.